spotlight on what sort of a global cues are we actually dealing with this morning, given the fact that you had the US markets that shut shop pretty low on back of disappointing numbers coming in from Wall Street. As of now, the US futures have stabilized this after the sell-off that the markets witnessed in the overnight trading session. You have seen a slight increase in the initial jobless claims. That also could be one of the factors that markets are watching out for. But it is the dollar index. That one is feeling the tariff jitters because that one has eased quite substantially, and that sort of has had a good benefit, at least for the emerging markets. On the other hand, Japan inflation rate has hit a 2-year high, which means the bets are now all on the fact that BOJ will go ahead with another rate hike. But if you look at the entire global cues in entirety, Nikunj, it looks like no news, and in fact for us, no news means good news.
It's status quo.
Okay.
With Trump at the helm, there's always news. And there will be more news. And you don't know from where news will come more. But you would say that in terms of a new narrative, there is no new narrative which could disturb or excite the stock markets. I'm talking about global markets here. So what is the positioning of global markets? Which is that US benchmark indices are not far away from all-time high, which has been the positioning. They've been trading in a narrow range, plus minus 2%. Crude, the course of direction for crude is lower. Dollar decisively seems to be coming down, and volatility is moving in a measurable manner. Nothing new has come on tariff. That whole concern for the moment looks like has taken a back seat, but a lot is anticipated in terms of what is coming next between Russia and Ukraine, considering that US now is intervening. So on the geopolitical front, something is expected. Whatever comes out, a ceasefire is actually good news for the world, for commodity prices, for crude, and for India. So while you cannot rely on global cues as a benchmark to judge what you should be doing today, where markets are headed, frankly, from a global standpoint, yesterday we were discussing implications of tariff. We were discussing implications of tariff even on Wednesday morning. Thursday morning, purely from a global standpoint, there is no pushback, there is no tailwind, and there is absence of any headwind.
All right, so that's the global setup looking like right now. But let's get back home then. And from the cues that we are watching from the D Street, there's been no relief from the relentless FII selling, because just again, yesterday they were a seller of over 3,000 crore rupees. But a lot of sector-specific action is what we are witnessing, because it's seemed to be a bit of signs of stabilization when it comes to the broader markets. The Nifty is seen to be consolidating, and amidst that, metal, realty and energy pack was seen to be gaining for the 4th straight session, while on the losing side, it was the pharma that has declined for the 3rd straight session. But Nikunj, what to make out of the moves that we are witnessing? Because just yesterday, though the benchmark indices were in the red, but can we call it a healthy consolidation for now?
See, it's not a situation where you can decisively say that, okay, we are out of the woods, the worst is yet to come. You have to take each day as it comes, and that I think is the best way to approach this market. So what do we know? Let's first look at the technical picture. FIs are selling, DIs are buying. What FIs are selling, DIs are buying. So there is no relief there, but there is no aggression there. That's how I look at the data. Barring that Bharati number, it's still a sea of red, and the number has not gone above 4,000. And it is still not it is not gone below 2000 also. So that trend is at play. That has not changed. DI buying, it continues. Flows, whether it is SIP or other factors, that continues. We know that the institutional liquidity is at equilibrium. Second, Nifty, it is finding support. Surely it is finding support. Now we may call it triple bottom, we may call it quad bottom, we may call it penta bottom. The support of 22,800, I think, guys, it has to be 22,800. That's it. Just take out everything else. 22,800, I think, is becoming this firm opinion. Now the problem with that 22,800 is that so far it is holding on. You go below that, then that could lead to a big shakeout, which I don't think markets are prepared for. So right now markets are working with an assumption that there is a ray of hope, or perhaps there is a level at which markets are bouncing back. It's like a trampoline, you just keep on bouncing back from that level. But imagine if that trampoline gets broken, then you'll fall. That is the risk with this entire support story. Then 2 days you've seen small and mid cap stocks coming back. Mighty relief. Mighty relief. A lot of the broken pieces are coming together. But can you decisively say that, okay, worst is behind? Are we out of the woods in small and mid cap stocks? First, let the large cap stocks stabilize. पहले वो ठीक होने दो. Then you make an opinion on small and mid cap stocks. Meanwhile, when this churn in the market is happening, there are the smart buyers who will come and say, okay, I like the stock, I wanted to buy it, it's down 30%. I think that shopping has started. It's like saying that when you see e-commerce sale, everything looks cheap, right?
Right.
But you buy what you need.
Yeah.
And that is where you would say, okay, I've been wanting to buy this thing and it's suddenly available. Or I've been waiting for a sale and I'm going to buy it now. So there is a crowd who's been waiting for a sale that's come back, and there is a crowd which suddenly is finding something attractive that's making a comeback. That does not mean that everything which is on sale is going to go up. This is not that period where everything and anything is going to go up. And I think that shopping has started, at least attempt to that has started. But trust me when I say that if 20 to 800 is broken, then that will lead to some churn. I don't think markets are prepared for it, because secretly some are hoping, some are praying, some are keeping their fingers crossed, some are keeping their fingers on their lips, whatever expression I can use. That 20 to 800 is going to be this important benchmark at which markets are finding support. If they do that, then next 10 days trades would change. If markets go below that, I think then we are in for some serious grind.
So keeping all of that in mind, Nikunj, the fact that you could say that 20 to 800 is like the Lakshman Rekha for the markets, one should watch out for that very closely. So what sort of strategy one should adopt, given the fact that now you are tempted to buy, hoping that this sort of a small bounce back that you've seen in this mids could be for real?
See, if you are a trader, you know that this 20 to 800 I think is the real deal. You go below that, that will lead to panic. So, and it's a very thin margin with which you would be trading. So for 20 to 800 to crack, the margin on the table is about 150 points. That is not a perfect way to trade if you're trading the Nifty. The Bank Nifty surely is doing much better. So the trade actually is Bank Nifty, but sell the Bank Nifty if Nifty goes below 20 to 800. So that I think is one trade if you're looking at the short term. Second, like I said, you really have to be very, very selective. There is a lot of pessimism which has got built in a lot of sectors, where I think next 6 months will start normalizing. And I'll just name few sectors. There's a lot of pessimism in power. I think excess pessimism, excess euphoria has taken shape, has been replaced by excess pessimism. So that sector will bounce back. Construction companies will bounce back. I think there's again excess pessimism which is becoming there. So you'll have to pick your spots in this kind of a market. You cannot look at themes, but you'll have to look at companies. Within that, you'll have to look at stocks. You'll have to do some degree of hard work. But to generalize that small and mid cap stocks are out of the woods, no. I like last 2 days of price action, but that is no guarantee that the last 2 days of price action is like the canary in a coal mine, which will tell you which way the danger is coming.
Right. So that's about the markets, the strategy one should look out for, at least, given the fact that we've seen 2 days of recovery coming in, especially in this mids. But yes, you cannot directly say that we are out of the woods or no. But let's talk about what exactly is happening when you talk about the global picture.